Today, I'm going to be talking about why I'm moving my 7-figure stock portfolio out of the stock market and into real estate. Before we get into today's show, a big thank you to today's sponsor, which is Augusta. If you haven't already, go check them out because you're able to get all of your onboarding documents completely digitalized, and you can do it for 90 days completely free. Just go to gusto.com/bootcamp. Now, I'm Mike Andes, and I own Augusta Lawn Care. We have 50 plus locations. I also have a whole bunch of other companies that I run online. You can see the links in the description below. But today I'm talking about the stock market because it's where I put my personal money to kind of work for me. And it's very passive. That's the thing I love about the stock market. But I'm moving most of that money, 70 to 80% of that money, out of the stock market before the end of 2021. And here I'm going to tell you why. There's really three main reasons. But right now, I've already started this plan, and I'm going to start moving money out of the stock market. And I'm actually already have on a pending offer on a 10-unit apartment complex that I'm purchasing to hopefully rehab it and improve the value of it. So the number one reason why I'm doing this is because I just don't see the same returns in 2022 on the horizon that I saw in 2020 or 2021. In 2020, after the whole collapse in March because of the COVID crisis and health crisis that we're having around the world, I put a lot of money in the stock market. And I had just over 90% return on that money. In 2021, against great growth, there was a reopening trade, and now we have like 70, 80% of returns on my portfolio for this year. I just don't expect me to be able to do that again. You know, you can call me lucky twice, but the third time, I just do not believe I'm going to see that return year after year. And I have to realize that I've kind of struck while the iron is hot, but I cannot expect that same level of return year in and year out. So do I think it's going to crash? No, but I just don't see the level of returns that I have in the past being on the forecast for 2022. And that leads me to number two. The reason why I don't think it's going to be a nirvana in 2022 and a massive, and I can't get 60, 70% return on my money, the reason is simply due to the fact that I believe, just my opinion, that in 2022, companies are going to have a really hard time with their comps, their annual comps for 2021. What I mean by that is when we look at the stock market and we have these individual companies that report on a quarterly basis, and they report their year-over-year growth based upon the previous calendar year's quarter. So, for example, Q2 of 2020 was brutal for a lot of companies because the economic collapse and everything that happened, the stock market tanked and all the rest of it, because people stopped spending money. Consumers stopped spending money because they were afraid of COVID and what was going to happen to their job and to the economy. That caused a massive shrinkage of the economy for Q2 2020 last year. Now, Q2 2021 is a completely different ballgame because now we've had massive injection of capital from the government in the form of stimulus, as well as the COVID crisis was really on the back burner. Like now people were opening back up. The economy was opening back up. Travel was opening back up. People were spending more money. We were just right off the back end of a massive stimulus check right after the new administration took over in the United States. So money was flowing. I have a really hard, difficult time thinking that the same thing is going to happen in terms of the level of growth that these companies experienced over the past 12 months. When they compare 2021 Q2 versus Q2 of 2022, I don't think their growth numbers are going to be great. I don't think they're going to be bad. Like companies like Microsoft and Google and Apple, etc., they've had massive growth. I just don't see that level of growth continuing at the same rate when we start comparing 2021's numbers to what's going to happen in Q2 of 2022. The third reason is government dependency. And that is due to the fact that the government for the past year and a half has been spending $120 billion every single month propping up the market. And eventually they're going to taper or take away the punch bowl. They're going to remove how much they're spending every month on when they're purchasing all these assets. And by doing that, there is going to be cause downward pressure on the stock market because now the bond market's going to look much more appealing. So when that happens, not if, but when, that is going to also cause a damper on these high growth stocks, technology stocks, and a lot of the stocks that I have been investing in. 70% of my stock portfolio is in higher growth, is in technology, is in these type of companies that will be affected by this sort of move by the government. And we saw even the past couple months when the Fed chair basically came out and said, hey, we're not removing the punch bowl quite yet. Like, we're going to delay on that. You saw the stock markets already begin to rally, and I truly believe that this might lead to a September and October rush and rally in the stock market because we have a few more months of the punch bowl at the party. But eventually that will be removed, and when that happens, it is going to cause downward pressure on these high valuation stocks. Now, why would I be getting real estate? Well, first and foremost is the risk of inflation. Because of all this money that's been printed, because of all this money that's been injected into the market, and because of supply chain shortages and everything we've seen over the past couple years with COVID, we're seeing a massive inflationary pressures, and I don't believe we're going to have 10, 15% inflation. But even if we see 5 or 6% inflation, during inflationary times, you don't want to be owning stocks that are promising yields down the road. You want to be having income-producing assets in the form of dividend stocks or things like real estate that can produce money time every single month. I get a paycheck, i.e. rent from the renters. Now, if we do see inflation, that's probably going to lead interest rates to going up. Now, if interest rates do go up, that's going to put downward pressure on the values of homes and real estate. And so some people would say, well, if you're buying it and inflation happens and then interest rate's going to go up, well, now the $1.85 million property that you just purchased might go down to 1.65 or 1.6 million. And that's true. But if we see that level of inflation, my stock portfolio would probably go down 25 or 30% if we saw that consistent, really out of control inflation that might be on the horizon in the next few years. So if we do see interest rates, yes, it will put downward pressure on the value of real estate, but I don't really care. I'll just hold the property, and in the meantime, it'll be still producing income because it has renters paying me money every single month. And that leads me to the last reason why I'm moving the money into real estate, and that is over the next 2 to 3 years, I personally believe that we're going to see a massive increase in rent prices. I feel like we saw that in the housing market, we saw it in buying, but the rentals, they're starting to do it now, like go up higher and higher in price, but I think it's going to be lagging because of the eviction moratorium and because so many people were not allowed to raise rents over the past 2 years. Well, now with that being lifted, I truly believe that over the next 12 to 24 months, we're going to see rents increase by between 10 and 15%, depending on where you live in the country. Also, if we do see interest rates go up, that's going to make mortgages much less affordable for a family or someone in the United States to purchase a home. Therefore, what are they going to do? They're going to rent, and that's going to increase demand for rentals. And when you increase demand, you increase the price. So that's why I'm moving about 70 to 80% of my stock portfolio over the next few months into real estate. I do believe in the short term, the next September, October, November, we're probably going to see a market rally because the Fed has decided to not taper their purchases, their bond purchases quite yet. But I do believe 2020 is going to have much less returns than we've seen in the past, and that's why I'm moving to a much more consistent income-producing asset like real estate. I'm Mike Andes. For more perspective, make sure you subscribe, and we'll see you tomorrow.